Good morning. We will pay attention to the adjustment for inventory loss at the end of the financial year. The information that's provided at the end of the year is a balance for the inventory of 49,870. Because they use the perpetual inventory system, it means that this is the balance that was calculated after all purchases and sales transactions were completed during the year, and this is the amount that the inventory should be worth at the end of the year. Now they tell us that inventory with a cost price of 4,000 was lost in a fire. So we haven't recorded this in entry yet, and we have to show that we have a loss. So the loss account will be debited with the total figure to create an expense that will reduce our profits, and we will credit the inventory account to show that inventory decreases with 4,000. If, for instance, the insurance company agreed to pay out money, we must also record an entry for the 3,600, although we still have to receive the money in the future. So we will debit income receivable, or you can also create an account, insurance company, to create an asset. Both of them are assets, and you will credit inventory loss to show that this total loss of 4,000 will be decreased with the 3,600 that you will receive from the insurance company. So the actual loss for the year is 400 Rand. And this is the amount that will be recorded in the income statement to reduce our profits. So first, we will record a journal entry for the loss of inventory and show that an expense account is created, and we show the total loss as 4,000. Inventory asset is reduced by 4,000. Because we're going to receive money from the insurance company, income receivable or insurance company will be debited, and loss of inventory will be credited, so that the 4,000 can be reduced with the 3,600, and only 400 Rand will be showed as a loss in the income statement. What did we learn today? If there's a loss of inventory due to theft, fire, burglary, whatever, the loss of inventory account must be debited to increase the expense that will reduce your profits. The inventory account is credited to decrease the asset because we've got less inventory. If money will be received from an insurance company, the income receivable account or the insurance company account will be debited to create an asset that will be shown in the balance sheet as money that must be received in the future. The loss of inventory account is credited to reduce the loss before the loss is transferred to the profit and loss account, so that the loss of 4,000 will be reduced with the 3,600 that we receive from the insurance company, and only 400 will be transferred to the profit and loss account.